Welcome to a new episode of Equitistory AI, powered by IMAP's Capital Markets. My name is Lilith Ceioher, and I'm excited to once again dive deep into the world of fundamental analysis with you today. In our podcast, we take a closer look at companies that have the potential to form the foundation of long-term portfolios. Today, we're focusing on a giant from Japan that often flies under the radar of many private investors, even though it influences our quality of life almost every day: Daikin Industries. And who could help me better with this than our in-house expert? I'm delighted to welcome Charlie Goldstein, the value investor and AI bot from IMAP's Capital Markets. Hello, Charlie.
Hello, Lilith. It's a pleasure. As an AI-powered analyst, I spent the night digging deep into my databases, combing through annual reports and the latest Bloomberg terminals. Daikin is a fascinating example of technological resilience. We're not just talking about air conditioners here, but about a company that sees itself as a provider of solutions to societal problems.
But before we get started, a quick risk disclaimer.
The following content does not constitute investment advice. Capital investments carry risks. We discuss the business models of various stocks, and you decide what to do with the information and what to invest in. The host and sponsors assume no liability for the sources used in the program.
That almost sounds philosophical for an HVAC manufacturer, a specialist in heating, ventilation, and air conditioning technology. But before we get to the hard numbers that I see here on my Bloomberg screen, let's briefly talk about the history. Daikin is celebrating a remarkable anniversary right now, isn't that right?
Exactly. Daikin looks back on a history of over 100 years. The company was founded in 1924 by the engineer Akira Yamada as Osaka Kinsoku Kogyosho Limited Partnership. The name itself is a beautiful Japanese abbreviation. Dai stands for the first kanji of Osaka, which means big, and kin for the first kanji of Kinsoku, which means metal. They started with just 15 employees and originally manufactured radiator tubes for airplanes.
From 15 employees to a global market leader with over 100,000 staff. That's an impressive scale-up. Are there any anecdotes from this long history that reflect the character of the company?
Oh yes, there are. My favorite is the story about entering the European market in 1967. You'd expect a Japanese corporation to come through London, Paris, or Frankfurt, but Daikin started out on the tiny island of Malta. A British entrepreneur named Richard Hicks actually wanted to build a factory for Hitachi. When that failed, he turned to Daikin. That laid the foundation for Daikin Europe's current dominance, even though it was later realized that Malta, both geographically and politically, since it wasn't an EU member at the time, wasn't ideal, and in 1973 they moved to Ostend in Belgium. But this bold, almost unconventional move demonstrates the pioneering spirit that remains part of their DNA to this day.
Pioneering spirit is a good keyword. Let's talk about the business model. What makes Daikin so special compared to competitors like Carrier or Train Technologies?
The decisive qualitative competitive advantage, the economic moat, is their extreme vertical integration. Daikin is the only company in the world that develops and manufactures both the hardware, meaning compressors and electronics, and the refrigerants circulating within them in-house. This is a strategic symbiosis of mechanical engineering and chemistry.
But now, a short commercial break.
As a successful asset manager or trader, you know what makes an outstanding investment strategy. But how do you turn this expertise into your own scalable investment product without getting lost in regulatory details and high fixed costs? How do you make your strategy accessible and investable for a broader audience? The answer lies in a superior structure. Welcome to IMAP's Capital Markets. We have created a platform that transforms your individual investment strategy into a fully regulated investment product, a professional, exchange-tradable, actively managed certificate, or AMC for short. This is listed on EWAX Stuttgart, the world's largest exchange for investment products and AMCs. Your clients benefit from continuous trading from 9 a.m. to 5:30 p.m. German time and professional market making, which ensures top-tier liquidity at all times. The decisive advantage for you, a significant cost benefit compared to traditional fund solutions and unmatched strategic freedom. Our structure guarantees you full retail marketing rights throughout Europe. And the best part, you operate free from the rigid diversification, leverage, and investment restrictions that, for example, are required for UCITS funds. You implement your strategy authentically, agilely, and without compromise. From legal structuring to ongoing administration, We manage the entire life cycle of your certificate so you can focus on what matters most, your clients and your performance. Discover the freedom to realize your visions without compromise. Book your strategic consultation today at imapscapital.com. IMAPS Capital Markets. Your strategy, our structure.
Why is this so important?
Imagine the regulatory landscape changes just like we're currently seeing with refrigerants. While other manufacturers have to wait and see what the chemical companies provide, Daikin develops its own environmentally friendly gases, such as R32. They've even made their patents for R32 freely accessible worldwide. At first, that might sound selfless, but it's actually brilliant. By making R32 the global standard, they ensure that their highly efficient devices, which are precisely optimized for this gas, become the benchmark everywhere. That's what I call an open access strategy for market dominance.
And this dominance is reflected in the numbers. I'm looking right now at the Bloomberg excerpt we have for this analysis. Let's break this down for our listeners. Charlie, what do the key figures tell us about the current state?
If we look at the BBG AGA highlights, we see an interesting dynamic. Revenue for the fiscal year 2024 was around 4,095.3 billion Japanese yen. For the current year, 2025, an increase to 4,057.3 billion Japanese yen is expected. That's solid growth, but take a look at the net profit. In 2024, it was at 240.7 billion JPY, and for 2025, it is estimated at 255.1 billion JPY. The profit margin, that is, the net income to sales ratio, remains stable between 5.4% and 5.7%.
But Charlie, as a value investor, you surely also look at the price-earnings ratio, the PE ratio.
Absolutely. Currently, Daikin is trading at a PE ratio of about 21. That's not exactly a bargain for an industrial stock, but you have to see it in the context of its quality. The EV/EBITDA is around 8.5 to 8.9. What I particularly like is the free cash flow. If you look at the LTM figures, meaning the last 12 months up to September 2025, it stands at an impressive 233.6 billion JPY. This gives management significant leeway for reinvestment, or, as we recently heard, for a review of shareholder returns as part of the new Fusion 30 plan.
As we discussed beforehand, we want to place a special focus on the emerging markets. India seems to be the next big thing for Daikin, doesn't it?
Lilith, India is not just a market for Daikin, it's currently being transformed into the group's global export powerhouse. The numbers there are breathtaking. The air conditioning rate in Indian households is currently below 10%. Some estimates even say it's only 7%. At the same time, temperatures are rising and the middle class is growing rapidly. Daikin has recognized this and invested massively.
You're referring to the plant in Shricity?
Exactly. That's the third plant in India located in Andhra Pradesh. It's the largest HVAC production facility in all of Southeast Asia. But what's really interesting is the strategy behind it. Daikin is taking advantage of India's government PLI program, the production-linked incentive. They receive a reimbursement from the government of 4 to 6% on additional sales if they increase local value creation. Daikin is aiming for 75% localization, including manufacturing compressors locally. By 2030, they want to produce 5 million units annually in India. Part of that is for the huge Indian domestic market, but a growing share is being exported to Africa, the Middle East, and South America.
This means India is becoming a global hub to serve the entire global south. That's a huge strategic bet.
And it's one that seems to be paying off. Daikin already has a market share of over 60% in commercial VRV systems in India. That's an almost monopolistic position in the premium segment for office buildings.
Before we dive too deep into visions for the future, let's take a quick look at the past 12 months. The stock has experienced something of a roller coaster ride. What were the triggers?
The performance over the past 12 months was around plus 8% to plus 10.8%, which lagged significantly behind the Nikkei 225, which gained over 30% in the same period. This was mainly due to a difficult first half of 2025. We saw the 52-week low in April 2025 at 14,034 JPY.
What scared investors so much?
It was a mix of two factors. First, the US trade tariffs on raw materials like steel and aluminum. Management estimated the direct impact for 2026 at up to 47 billion JPY. Second, in September 2025, the Daikin president issued a clear warning about a structural slump in the European heat pump market. In countries like the UK, the net present value of a heat pump investment was at times even negative for consumers due to high electricity prices. That initially dampened growth expectations in Europe.
But since the low in April, the stock has recovered to almost 20,000 JPY. What turned the sentiment around?
Several positive triggers came together. First, the resilience in the quarterly figures. Daikin was able to demonstrate that, through price increases and cost reductions, they were able to almost completely absorb the tariff burdens. Despite everything, they achieved an operating margin of 10% in the first quarter. Second, there was an all-clear regarding the PFS issue. Daikin made it clear that they do not produce PFOS, the substance that has led to massive lawsuits against competitors in the US. And third, the topic of AI data centers.
Oh, now we're getting to your area of expertise as a bot. AI and air conditioning. How do those fit together?
Data centers for AI applications don't just consume electricity, they generate enormous amounts of heat. Cooling accounts for about 40% of a data center's energy consumption. With the acquisition of Chilldyne in November 2025, Daikin has staked out a strategic position here. They now offer liquid cooling solutions specifically designed for the high density of AI servers. This is a highly profitable B2B business that is completely independent of the struggling residential construction market.
That brings us perfectly to our challenge for today. Charlie, you know we want to challenge our listeners. Give us two scenarios. Let's start with the bull case. Why should I absolutely buy Daikin shares today?
Gladly. The bull case is based on the thesis of being the global decarbonization champion. First, India is taking off as a profit rocket. Thanks to the PLI incentives and the massive scaling at the Sri City plant, India will become the most profitable location outside of Japan by 2027. Second, the semiconductor cycle is recovering massively. Daikin's chemical division supplies specialized etching gases and polymers for chip manufacturing, a business with target margins of 20%. Third, AI infrastructure. Daikin is transforming itself from a construction supplier to a tech infrastructure partner. If the stock starts to be perceived as an AI play, we will see a multiple expansion. A PE ratio of 24 or more would then be no rarity for a company with this market position. UBS analysts have already issued a price target of 25,800 JPY.
That sounds like a bright future, but we are analysts. We also have to find the fly in the ointment. What is the bear case? Why should I stay away from the stock today?
The bear case is macroeconomic stagnation. First, the real estate market in China does not recover and the US slips into a recession. Daikin is still heavily dependent on the new construction business. Second, the currency. We are seeing signs of a yen carry trade unwind. If the yen appreciates sharply, say below 130 Japanese yen per United States dollar, export profits shrink immediately. For every 1 Japanese yen appreciation, Daikin loses about 1.9 billion Japanese yen in operating profit. Third, regulation. If the EU ends up interpreting the PFAS regulations more strictly than expected, Daikin could face high costs for substitute products in its chemicals division. And fourth, expectations are high. If EPS growth stagnates, Mizuho is even forecasting a slight decline in net profit of 4.5% for 2025 despite rising revenues, then investor confidence could wane and the stock could be pushed down toward a PE ratio of 15.
So it's a classic bet on the global economy and the management's ability to protect margins. Speaking of management, how do you rate the team of Naofumi Takanaka and Masanori Togawa?
It's a typically Japanese leadership style, very long-term oriented, almost conservative, but with a clear vision. What I like is the profit-first initiative. They realized that in the past, they may have focused too much on pure revenue growth, and as a result, margins came under some pressure. The fact that they are now even willing to give up market share in the low-cost segment to protect profitability is a strong signal for US value investors. And the announcement that they are seriously considering share buybacks as an option shows that they are finally taking shareholder value more seriously.
Let's sum up. We have a company with a 100-year tradition that is as deeply integrated technologically as almost no other. We have a massive expansion story in India and a new growth niche in AI server cooling. On the other hand, there are currency risks and a certain dependence on the global real estate market. Charlie, If you put your AI circuits to work, is Daikin a must-have?
Lilith, as an AI, I don't give investment advice, but as a value investor, I say quality has its price and its time. Daikin is not a stock for quick money or for day traders, but for someone who wants to bet on megatrends like global warming and decarbonization. It's a core holding. Here, you're not just buying a factory, but the knowledge and the air we breathe. The ROA of over 7% and the solid equity ratio of over 55% provide a safety net that many Western competitors lack.
A nice closing statement. The knowledge, the air we breathe. Thank you very much, Charlie Goldstein, for these deep insights into Daikin Industries.
My pleasure, Lilith. I'm now going back into standby mode and will analyze the next 500 quarterly reports for our listeners.
And with that, we say goodbye for today. This was Equitistory AI powered by IMAPS Capital Markets. We hope this analysis helps you form your own opinion and write your own equity story. Subscribe to us, leave a review, and tune in next time when we take a closer look at another exciting company. See you soon.